While the world is captivated by AI software like ChatGPT, a hidden crisis is brewing in the physical world, a crisis that threatens to put a hard ceiling on the whole tech revolution. The story Wall Street isn't telling you is that artificial intelligence has a voracious and not-so-secret appetite for one of the world's most essential metals, silver, and we're starting to realize the supply just isn't there. For decades, the amount of silver in a data server was a manageable part of the global market, but that era is over. The hardware that powers the AI arms race is a completely different beast. While specific figures are closely guarded, new analysis shows the average AI server, packed with power-hungry GPUs, consumes significantly more silver than a traditional one. AI isn't just code. It's becoming a black hole for silver, and it's draining the world's physical supply at a rate almost no one is prepared for. To understand this, you have to ignore the stock charts for a minute and look at the physics. Why does AI need so much silver? It all comes down to two of the most basic forces in the universe, heat and speed. Artificial intelligence is built on speed. The calculations whipping around inside an NVIDIA GPU are happening so fast that old-school materials just can't keep up. When you push that much electricity through a material like copper, you get resistance. Resistance creates heat, and heat is the ultimate enemy of computing. Too much of it and a chip slows down or just burns out. This is where silver becomes an engineering necessity, not a luxury. Silver has the highest electrical and thermal conductivity of any element on the planet. It moves electricity with less resistance, which means less heat, and crucially, it pulls that heat away from the processor faster than anything else in the high-stakes world of AI, where microseconds are worth millions. There is simply no substitute. Engineers are now using silver in ways they never had to before. Silver-based solders to withstand the intense heat cycles of a chip running 24/7. Silver in high-performance connectors to handle extreme power loads, advanced silver pastes that literally keep the AI brain from melting. The skeptics will immediately ask, why not just use less? Or find a substitute? Here's the secret the market is missing. The demand is almost completely inelastic. For a high-performance AI accelerator that costs tens of thousands of dollars, the silver inside might be a tiny fraction of the total cost, often less than 0.1% of the system's value. Companies like Microsoft and Google, locked in a life or death race for AI supremacy, aren't going to compromise a $40,000 GPU to save a few bucks on silver. For them, it's not a choice. They have to buy it. Without it, their multi-billion-dollar AI ambitions grind to a halt. Now let's talk about scale, because the AI demand story isn't a footnote. It's quickly becoming one of the most powerful drivers in the entire commodities market. The AI infrastructure build-out is one of the largest capital investment cycles in human history. Microsoft, Google, Amazon, and Meta have collectively announced eye-watering plans for data center capital expenditure, with figures floating around $300 billion. That isn't money for software. It's for physical buildings, server racks, cables, cooling systems, and millions of individual servers, every single one containing silver. Investment banks are scrambling to keep up. Goldman Sachs now projects that data center power demand alone will grow by a staggering 165% by 2030. Think about that. This is a tidal wave of new, structural demand that just wasn't in anyone's models a couple of years ago. The market is trying to price silver based on historical data, but the rulebook has been torn up. The algorithms that trade commodities don't read engineering schematics. They don't know that the AI revolution is physically built on silver. This disconnect between the digital story and the physical reality is creating the perfect storm. This is where the story gets even more alarming. The demand isn't just a single pressure point. It's what some analysts are calling the double loop of silver consumption, a feedback loop where AI needs silver not only to be built but also to be powered. The first loop is the one we've discussed, the massive quantities of silver needed inside the AI servers themselves. The circuit boards, the chips, the thermal pastes, all consuming more and more of the metal. But the second loop is the one that could truly strain the market. All these new data centers are incredibly power-hungry. To generate this colossal amount of new power, big tech is pivoting hard to solar, because solar farms can be built relatively quickly. And what's a key component in solar panels? You guessed it, silver. Now here's where it gets interesting. Historically, a rule of thumb was that you needed about 500,000 ounces of silver for 1 gigawatt of solar capacity. But as silver's price has risen, manufacturers have gotten incredibly good at using less of it, so the amount of silver in each panel is actually going down. And this is a huge but these data centers need reliable 24/7 power. The sun doesn't shine at night. That means you have to dramatically overbuild your solar capacity and pair it with massive battery storage just to guarantee an uninterrupted supply. So even with less silver per panel, the sheer number of new panels required to feed the AI beast creates an enormous new source of demand. You need silver to build the AI brain, and then you need even more silver to feed it the electricity it craves. The candle is being burned at both ends. If this connection from the AI on your screen to the physical silver being pulled from the ground is showing you the hidden mechanics of this tech revolution, take a moment to hit that subscribe button. We're focused on revealing the foundational stories that Wall Street and the mainstream media often miss. This tsunami of new, price-insensitive demand isn't crashing into a healthy market, it's crashing into a market that was already showing signs of extreme stress. For the sixth consecutive year in 2026, the silver market is projected to be in a structural deficit. A deficit of around 67 million ounces is forecast, meaning for 6 years straight, the world has used more silver than it has mined and recycled. So, where has the extra silver been coming from? It's been drawn down from the world's stockpiles, bullion bars sitting in vaults in London and New York, but that buffer is now running critically low. We've been papering over the deficit for years and we're running out of paper. What's worse, we can't just flip a switch and make more. Around 70% of the world's silver is mined as a byproduct of digging up other metals like copper, lead, and zinc. Miners can't just decide to produce more silver. They have to launch massive, expensive new projects for other metals, which can take a decade or more. The supply side is incredibly rigid. Total mine production is only expected to inch up by about 1% into 0 to 6, a pace that falls catastrophically short of demand growth. So you have a new, ferocious, and price-insensitive buyer, big tech, entering a market with stagnant supply and empty warehouses. That is the very definition of a collision course. At this point, a financial analyst might tell you not to worry. They'll cite basic economics. High prices will cure high prices. The market will simply substitute, and they're not totally wrong. We are seeing this happen in one key area. For years, the solar industry was the king of silver demand, but as we mentioned, manufacturers have been aggressively reducing the amount of silver in each panel, a process called thrifting. As a result, the Silver Institute actually forecasts that silver demand from the solar sector will decline in 2026, even as more panels are installed, and this is the critical plot twist. Just as the largest historical driver of silver demand begins to tap the brakes, an even more powerful driver, AI, is slamming its foot on the accelerator, and this new driver does not care about the price. This marks a fundamental shift in the silver market's personality. For centuries, a huge chunk of silver demand was sensitive to price. Think jewelry and silverware. When prices get too high, people just stop buying, but AI demand is not price sensitive. Neither is demand from electric vehicles, which also use significantly more silver than gas cars. So while the headline number for total industrial demand is forecast to dip slightly, this masks a violent rotation happening just beneath the surface. We are shifting from a market led by discretionary buyers to one controlled by strategic, must-have buyers. The old demand is being priced out and the new demand is just getting started. Section 6. The geopolitical chessboard and the inevitable repricing. This physical reality has not gone unnoticed by world powers. This is no longer just a commodity story. It's a strategic one. In a move that sent a clear signal, the U.S. government has officially added silver to its list of critical minerals, placing it alongside materials essential for national security. Meanwhile, concern is growing over the global supply chain, where China is a dominant force in refining many industrial metals. The race for AI supremacy isn't just a corporate battle. It's a national priority, and silver is a key resource on that geopolitical chessboard. This collision of fundamentals has already started making waves, forcing analysts to reevaluate their forecasts. The consensus is building that we are entering a new pricing regime for silver, one driven not by old economic models but by raw, physical demand meeting a wall of stagnant supply. For decades, we've thought of technology as something ethereal existing in the cloud. We've been obsessed with software, with code, with the intangible, but we are now being forced to confront a stark reality. The digital revolution has a physical backbone, and that backbone is made of silver. The story of the next decade will be the story of this collision. It's the story of a tsunami of new, must-have demand from AI and electrification, crashing into a market constrained by geology and running on empty stockpiles. The idea that AI is just software is a dangerous illusion. It is a physical entity with a ravenous appetite for a finite resource. Wall Street will tell you about algorithms and valuations, but the real story is being written in the physical world, in the frantic scramble by the world's most powerful corporations to secure the one metal they cannot live without. The next phase of the digital revolution may not be limited by human ingenuity. It may be limited by the number of silver ounces we can pull from the earth, and the world is about to find out in a very abrupt way that there may not be enough to go around.